Please welcome to the stage Tony O. Elumelu, Group Chair of Heirs Holdings and United Bank for Africa Plc, and founder of the Tony Elumelu Foundation, and Shan, CEO and Director of the DBS Bank Group, for a conversation with Bloomberg's Jennifer Zabasajja.
Thank you. Perfect. Thank you so much. It's wonderful to be on stage here. It's wonderful to be here at the 5th Economic Forum and to speak with Shan and Tony. Listen, let's get into it. This session is about the new growth playbook for banks, and both of you represent major banks in your region, in your countries where the banks are held. But so much of the day has been talked about a lot of the uncertainty that we've been seeing over the past 2 months. I wonder, from your perspectives, as CEO, let's start with you, Shan, of DBS. How do you plan for the back half of 2025? What is the playbook that you have?
So I took over as CEO a day before Liberation Day. We came up immediately with scenarios. And you know, it's interesting. The trade outside the US, which we call TOTUS, T-O-T-U-S, it's actually still 89% of world trade. And so the playbook that we had was, we'll have to plan for every kind of scenario, from the worst to the best and the stuff in between. And then we have to help our clients to navigate. First order impact would be countries that are affected, obviously China predominantly, to the US. Industries that would be affected, which would be consumer discretionary, electronics, semiconductor, etc. And then figure out, you know, what the playbook would be for the first order impact. The second order impact, however, which was the bigger unknown, was number one, the increase in volatility, tremendous volatility in interest rates and exchange rates. Number two, the crash in consumer confidence. Number three, the huge volatility in markets. Global markets went down a lot, if you remember, it went back up. But there was this huge volatility that we had to help our clients navigate. Most CEOs don't like uncertainty. We had a great, when I talked to all my colleagues in other banks, everyone had a great first quarter. But second and third quarter, everyone said, you know, our clients are pressing the pause button because nobody knows. I haven't heard so many CEOs say these three words, I don't know, as I have since April 2nd. Having said that, though, I do believe that in Asia anyway, a lot of Asian clients and Asian companies realize, look, there is a lot of trade to be had outside the US. Intra-regional trade in Asia is growing. You have a population of nearly 5 billion, a population that is educated, hardworking, and very AI-focused, and very much focused on the future. So if we invest correctly, and we look at, you know, other supply chains, you have to help your clients to diversify their risks. And with volatility, you can actually grab a really good rate or a really good exchange rate to help. And look at new supply chains and look at also new technology, tech stacks, etc. So it will be a bifurcated world, and we're just going to have to live with it.
Tony, before I get your take, I do want to give a homework assignment to the audience, and that is a poll that we are going to do. Shan was just mentioning a number of disruptive factors that we've seen first half of the year. So our poll question for the audience, hopefully you'll engage, what is the biggest driver of transformation in global banking right now? We have three options up there for you: disruptive technologies, currency volatility, and tariff and trade policy. And we'll circle back after this conversation to see where the audience is. But Tony, let's get your take on what we have seen in the first half of 2025, especially from the perspective of a CEO of an African bank, looking at really the macro picture right now.
Okay, so I chair United Bank for Africa, and UBA serves 45 million customers across the globe. We operate in 24 countries on 4 continents, and we process transactions in billions on a daily basis. UBA is helping to transform lives on the continent, because payments and access to finance are critical for the development of Africa. But we're just starting. There's still so much to be done. And from where I sit as the chairman of this bank, I believe that banking infrastructure is as critical, as important as in the transformation, the renaissance of Africa, as power, roads, ports. And the key thing is what we all need to do to have the banking sector, the finance sector, drives Africa's prosperity, drives Africa's transformation in the 21st century, given where we're at and the challenges that we see. So for me, there are 4 critical pillars we need to tackle. One is to make Africa a safe haven for savings. Mobilizing domestic savings is very critical for transformation of economies. 2 is to enable private global capital find its way into Africa, to help power investments that we need to drive the continent's economic transformation. The 3rd is capacitizing and improving our ability on the continent to transact and swiftly effect payments. Africa is a continent of about 1.3 billion people, and yet we don't have very strong, robust payment engine, which is where institutions like United Bank for Africa is coming forward to provide opportunity and solution for that gap. And lastly is what I call Africa capitalism, which is enabling the private sector to drive, orchestrate, and lead the growth and transformation of the continent. I believe that these are things we need to do to take Africa to the next steps.
How do you think about African banks, though, in the context of what is developing a lot of new trade relationships outside of the continent? Where do African banks fit into that playbook?
I like the questions you asked. If I was looking at the currency payments.
We're going to get to that.
And I'm telling myself, if I were to vote, which one would I vote? So for Africa today, African institutions, what we do at United Bank for Africa is because we see that there's a gap. Payments, trade. And so African institutions are building capacity, but we need to also partner with the rest of the world to have robust payment capacity to help transactions as well as facilitate trade between Africa and the rest of the world. For instance, United Bank for Africa, we operate in the Gulf, and we like to follow Gulf businesses into Africa. We understand our ways around Africa. We want to handhold companies that are coming to Africa to invest. We also facilitate payment with the rest of the world. So we believe that in the 21st century, African financial institutions should be strong on trade facilitation, should help payments transactions for the continent and with the rest of the world, and most importantly, be catalytic in the transformation of the continent.
And Shan, can you jump in? Because we were talking about the payment infrastructure that is a focus for DBS. Can you speak to that?
So, what do banks do, right? Banks take deposits and they lend it to businesses or individuals. And that role will be disintermediated by fintechs that can do unbanking, do something, one vertical really well. So for us to continue to be relevant, you have to be digital. You have to have your data in a data lake, and you have to have your AI models, and in time to come, which is now, be able to adopt the new generative AI technologies. So in order to continue to be relevant in deposit gathering, you have to do payments. That's both domestic payments and international payments. So today, most of Asia and most emerging markets now have real-time payment rails, which means actually your country-to-country payments can be atomic and instant. Today, with blockchain, you can also have cross-border payments to be atomic and instant. And, gone are the days where you have T+1, T+2. It still is, unfortunately, in most countries. But I believe that technology today can help us to leapfrog and have real-time payments in small amounts. So with technology, with the global payment system, I do think that, especially after Liberation Day, many countries are thinking, well, in the past, a lot of trade happened in US dollars. And perhaps if people are worried about having too much concentration in US dollars, then they might be thinking, I might need to have alternative currencies. And that's where I think, increasingly now you're seeing a lot more trade happen between, let's say, the GCC and Asia in other currencies, including the euro, including CNH, etc. And I believe that diversification of currencies will continue to happen.
How have you seen currency volatility, in some cases strengthening in your region? How has that benefited the bank at this point in time? And then I want to get Tony's take, because the Naira's been doing something a little bit different. Shan?
Well, in adversity comes opportunity.
Correct.
And when you have volatility like this, and honestly, I haven't seen vols this high, and I've been in banking a long time, if it's in your favor, grab it. So, for example, when interest rates fell right after Liberation Day, that was our clients' chance to lock in an IRS, right? Get your interest rate swap in and lock in a cheap, lower rate. And most of them did. For other companies where they have currency swings as well, again, using the FX volatility to lock in a rate. So we've came out with a product where you can actually lock a rate forward in your digital account. Just lock it, what you call it FX secure. So with technology today, you can come up with all kinds of interesting solutions, and high vols means obviously higher risk, but also more opportunities.
Is your expectation, though, for this to continue to be a benefit for the bank?
Well, a lot of investment banks announced very good results in Q1 because volatility's been good. And I won't be surprised if April, a lot of trading rooms in banking made quite a lot of money, if you went the right way, of course. But most banks are long volatility. Most traders are long volatility today. And if you're long vol, I think you should do well. Is it an opportunity? It's both an opportunity for hedging, but also an opportunity to get your clients on board to make sure that they have the right diversity of currencies.
Let's talk about the Naira. Thanks, Shan, because the Naira has had quite a bit of volatility, Tony. Yeah. Is the risk as great, though, for African currencies as the perception has been over the past few years?
I think first, for those who don't know, Naira is the Nigerian local currency. And currency volatility is a challenge for Africa and for Asia. This global south, fixing the volatility of our currencies will be very critical for ultimately developing our economies. So it's a challenge. And everyone thinking about a solution to that, hoping we can find one soon. But talking about Nigeria, let's break it down a bit, As an investor, because beyond being a bank chairman, I wear other hats. I invest in the oil sector, the power sector, and hospitality and the real estate sector. What's important to people to a large extent is predictability, stability. Let me know, even if the rate is, whatever the rate is, but let there be predictability. Let me enter the boardroom. Let's plan. Let's build scenarios. Let's be sure of what it will be. So in Nigeria, we've had currency situation, but in recent times, there's been interesting, encouraging stability. So we can plan, and that is very, very, very welcome. It's a good development, and I'd like to see that continue. And for me, as I think of not just Africa, but Africa, Asia, that is very critical for every economy. Stability and ability to predict your currency is very critical. Now, you talked about gains. Yes, some people, there's gains when you have a volatility. There's losses also. But what's important is taking advantage of the opportunity or the challenge. If you find a solution around the challenge, it becomes an opportunity. If you see an opportunity and you take advantage of the opportunity to further strengthen your balance sheet, if you're a financial institution, even for non-financial institutions, strengthen your balance sheet and position because of that currency fluctuation and volatility, which will definitely come again, either in near term, mid-term, or long term. So currency is a challenge, but it's almost a constant for planning in Africa as it is in Asia. And ability to predict is very critical. And that is what I see in Naira today. I see Naira is becoming quite stable. And I have friends who live in the other OECD countries, want to do transactions with Africa and Nigeria in particular, and they are happy that there's stability and predictability of the currency. And we want to see it stable and, if anything, go down progressively.
I was going to ask both of you, what is the concern among clients that you are hearing for both of your regions as far as banking goes? Is it still a bit of this instability, Shan?
So I think the supply chain bifurcation, the sort of China for China and the rest of the world and you know, or the US for US, I think it's supply chain bifurcation that is an issue. In the past, if you made in China, you moved to ASEAN, and then you moved to Mexico or Eastern Europe, Poland, Hungary, etc. And today, the uncertainty of how much tariffs are going to cost wherever you are in the world is a big issue. And business people don't like uncertainty. So some of the deal flows that they were thinking about, they've pressed the pause button until there's more clarity around how much tariffs are from each country.
Are you seeing that globally?
Yes, but you know, as I said, I think most people are also thinking, well, I might sell to the US, but I also can sell outside the US. I can sell in Europe, I can sell within ASEAN, I can sell intra-regional trade, you know, EMEA, etc. So the opportunity here is to look for new supply chains and look for new markets. That's one. The other opportunity is really the use of generative AI to reduce costs and increase productivity. And that, I think, in Asia, the leapfrog, the ambition to do so is tremendous. It's both an opportunity and also a challenge, because if you don't, you'll be left behind. And so a lot of our clients are looking at what's happening in Industry 4.0, right? How can an AI and Gen AI help industry to make manufacturing a lot more effective, a lot more efficient, a lot more productive? You have humanoid robots also creating, now in an aging demographic in Asia, robots and humanoid robots, smart humanoid robots could really be a game changer. You've got now AI-enabled biotech. That would be a very interesting, you know, again, life-enhancing new technologies. Deep Sea, we all know, the generative AI and deep tech, quantum computing, drones, flying drones, etc. So I think there are many new technologies. We all just have to get our heads around it. China's taken the leapfrog and said we're going to focus on these new growth areas. So I think what's happened is what Trump has done is created a desire to be more self-sufficient, a desire to be more resilient, and a desire to diversify. And this could, in the long term, lead to structural changes in structural investments that could help some of these Asian economies leapfrog. I think that's exciting.
What about within a bank, though, like DBS? Would you potentially see job cuts because if there's more integration of Gen AI? I mean, what does this mean structurally for an institution like that?
Well, you know, I keep telling my colleagues, this means all your mundane work that you don't like doing is going to disappear, which is great, because that frees up capacity for you to do more meaningful work. So in DBS, we've adopted both a horizontal and a vertical approach to the use of generative AI. So the horizontal approach is, we call it DBS GPT. That means anyone can tap into our data lake and get answers to policies, you know, how do you help customers, etc. And then the vertical use cases, for example, the call center. Today, you know, we used to have people like trying to check on, you know, customer, where the customer journey went wrong. Today, with generative AI, the bot can answer those questions, or the customer can call somebody who can answer the question within 90 seconds, your problem is solved. So the vertical use cases, in the past also pitch books were done by young analysts. Today a generative AI can do that, right? In the past we had people looking at documentary trade for documentary trade, LCs, etc. Today a bot can do that. The bot looks at all the legal jargon, legal documents and say, okay, this works, this doesn't work. And that just saves time. It takes out a lot of the grunt, mundane work that humans don't like doing and frees up capacity. So I think I'm not worried about job losses because I think, you know, humans are so agile. And as long as you hire for people with the right attitude, then they will learn quickly and they will know that their jobs will change. But it's how do you stay ahead? How do you stay nimble? How do you have a good attitude so that you can unlearn, relearn, and embrace this technology, because everybody else will.
So it sounds like ultimately you think that will be a benefit for the business moving forward.
So for example, the people who used to work in our call center or service center are now, we're giving them customers. And they can't wait, because I told them, I have so many SME customers, they don't have relationship managers, but if I could free up your time from the service calls, then you could look after, these customers for us and own these customers for us and give them a great experience. At the end of the day, we're humans. We all want human-to-human interaction. We just don't want them for mundane stuff like, oh, how do I change my address, or how do I, check on my payment, etc. Yeah. You want to have that customer-to-customer experience for more meaningful things, like how do I increase my sales? How can you help me in another country?
Yeah, Tony, can you jump in here from the region, disruptive technology?
So before that, I would like to say that Africa is an interesting continent. We have over 600 million people, 700 million people of the 1.1 billion Africans are under the age of 25. So employment, job creation is very critical for us on the continent. Also, in Africa, from the customers we serve, access to capital is so critical. And the headache or the challenge is, how do we create an ecosystem? How do we support the small and medium-scale enterprise on the continent so that collectively we all can help transform Africa by creating jobs for our young people? And AI has been wonderful. United Bank for Africa, we introduced AI chatbot, first chatbot in banking system on the continent in 2017. And we are moving further to generative AI. But what is critical for us is, if I prioritize the things that are important to us, I think that supporting small and medium-scale enterprises is very, very, very important for the continent. AI will assist that, but more importantly, I think they need access to capital and the infrastructure that they need to succeed. Electricity is such an issue. I listened to the conversation this morning here when the energy minister was talking about scaling up, even America scaling up to 100 gigabytes of electricity. For AI to do well on the continent, we need to even improve further the electricity availability on the continent. So for me, first as an investor and also as a chairman of a bank and an Africa Plc, and somebody who thinks a lot about how to transform Africa, especially into a 21st century from within, ability to improve access to electricity on the continent is so critical to the development of Africa. Ability to improve payment infrastructure and system on the continent is so critical for the development of the continent. Ultimately, we need to create jobs for our young people on the continent. There's not time for any job losses, but we need to do a lot more so that we can increase the ability of the system to create jobs that our young ones need.
What role does the Gulf play in that, especially in your conversations as chairman of the bank? Do you think that plays a role in ultimately achieving some of these goals?
I didn't hear that.
What role does the Gulf play in investing here?
United Bank for Africa, the reason we have operation in the GCC is because of, in the Global South today, intra-South cooperation is very important. Trading amongst ourselves, facilitating payments and trade amongst ourselves, very important. Creating economic opportunity, attracting global capital. President Trump came and there was a lot of pledge, 1.1 trillion investment in America. And I was telling myself, that is the kind of investment we should be talking about for Africa, because Africa needs it more than America. Africa has a lot of opportunities. Africa has a huge population that's upcoming and very energetic and active. We need to do more on the continent, which is one of the reasons I'm here. And the message is very simple. There's a lot of private global capital looking for investment destination. Africa is now ready for the global capital to come in and make investments so that collectively the investments can help create prosperity for the investors as well as prosperity for locals. We see the Gulf as credible and historical partners to Africa. We welcome people from the Gulf states to come and invest in Africa. And recently, the Tony Elumelu Foundation, which is one of the hats I wear, which is helping to democratize luck, create economic opportunity and prosperity on the continent. We signed a partnership with UAE to further support young African entrepreneurs. What I'm saying is investments, not aid. In the 21st century, on the continent in Africa, we have the market, we have the people, we have a lot of endowments. Let's collectively come together to harness this for common good of humanity, for benefit of the investors, as well as benefit for the locals. That is that is, in my viewpoint, the most important objective that all of us should pursue, especially when we're thinking of the global south and cooperating amongst others. So Gulf, and they are living up to expectations so far, so good. We're enjoying increasing business relationship between Africa and the Gulf.
It sounds like you've been having some productive conversations, but I'm just going to put that out there. Really quick before we go, I do want to circle back to the poll that we did to see if anyone participated after this discussion. Wow. I think we had some sway up here, not me, but clearly disruptive technologies. Shan?
Oh, fully agree. That would have been my answer too. I think disruptive technologies. I mean, as a tech-enabled bank, it's not just us using it, it's also us funding these potentially disruptive technologies and looking at these companies with a different kind of lens. You can't bring a traditional banker lens into financing these high-growth companies because you won't be able to fund them otherwise, right? So I have a whole team that just does new economy coverage, and they really look at different lens. You know, what's the growth potential? Who's your GP? Who's your LP? You know, who have you got to support you? Who are your partnerships? And how can we help you grow? How can we help you leapfrog? Where's your IP, etc.? It's creating this ecosystem of success. You know, I'm optimistic. I mean, being Asian, we're pragmatic. We're a pragmatic lot. And I guess fundamentally quite optimistic. But I'm so glad to see that the audience here voted disruptive technology.
Wonderful. We have to leave it there. Appreciate both of you, Tony Elumelu and Tan Shan. Please join me in thanking them for the
Thank you.